What's good, guys? Welcome to another episode on Xerxers Capital. So in this episode, I'm going to be showing you guys my trade recaps from few weeks ago, like the FOMO week, the trades I took, and the winners and the losers. And mind you, I've been on a crazy losing streak for a while now. I've been on a back-to-back losing run. The SLs has been raining on me down like crazy, and this is going to be episode 2 of my series of scaling up prop firm to get $100,000 in prop payout. So this is going to be episode 2. If you not watch episode 1, you can just go back to the previous video and watch episode 1. So as I said before, I've been on a very, very crazy losing streak. If not for a very intense risk management, my accounts will have been bleeding bad. So, and my risk management is very simple. When I see an A plus setup, I risk 1%. But if I'm very, very confident about the setup, I can just risk 2%. But if I see like a B plus setup, I will just risk 0.5, sometimes 1%. So I don't risk past 2%. But these past few weeks, I've been on a massive losing streak, like back-to-back SLs. But thank God I'm still able to keep the account because I've not breached it. My 5K account, I'm on the second stage, the second phase. My QT 10K account, I'm on the second stage also. So let's go to the chat and let me show you guys how everything went down during FOMC week and this week. Okay, yeah, this week is FOMC. Yeah, this week how everything went down. So right here, this is the chat. This is the chat. Let me see. So first and foremost, I took this trade on GU. You guys can see how crazy this SL went. Okay, it went straight to SL, like it didn't even. So I took this trade on GU, and boy, this is called a sniper SL. It went straight to my SL, so I took a loss on this GU trade. It went straight to my SL. I took a loss on this GU trade. That's my first loss. I took this trade on Friday, and it went straight to SL, like it triggered and boom, SL straight up. Let me check. Let me see. Okay, no, there's nothing on this one. Let me see. Yeah, I took this trade on CAD. I took this trade on CAD JPY, and this one also. This was exactly on FOMC day. And I knew when this trade triggered, it was already showing me signs that it was going down. But I don't know why. I just left it at either SLOTP, no risk to Ferrari. Like I just left it because if you check this, you can see that when it triggered here, it started rejecting. It started going up, like these 2 1 hour candles. It went up, then boom, this 1 hour candlestick, it came down, it rejected. Another 1 hour candlestick opened, it came down, it rejected. So it was really playing with my emotions. So I just left it that, bro, no risk, no Ferrari, TP or SL. And this third 1 hour candle came up, then FOMC came in and just took me out. And in this trade, I risked 2%. I went very hard on this trade, and so it took me out madly. Like, it took me out crazily, and it started going up. And it smashed my TP. This was another loser, and this was another losing trade I took this week. But it still respects my overall bias, which was this POI, and tap into the POI and it started going up. But it's just the entry that was really foggy. So this was another losing trade. I was just getting back to back losing trade. Okay, and I analyzed this, but I didn't take this and this. I didn't take this trade, but I analyzed it that okay. I was just observing it, but at the same time, it just took me out. So this, I didn't take the second one, but this first one, I took it, but spread on a prop account, it took me out. And this was very painful because this ended up to be a winner, but the spread on the account was very wild. And if you guys notice, when it's like 10 o'clock on this prop account, the spread just opens wildly. If you cannot enter a trade when it's 10 o'clock already on this prop, because the spread is going to be outrageous. Normally, maybe like 7 o'clock, if you enter a trade, the spread can just be minus 90, maybe 96 cents. But if you enter a trade 10 o'clock in the night, you can see minus $20 at first. So it's not really advisable. So I think it was that spread when it opened around that 10, it just took me out, because on my trading view you can see that it hasn't touched my sell. But when I went to my MT5, it was already taking me out, and this trade end up being a winner, but I was taken out. So this automatically it's a loser already, even though on the MT5 it ended up being a winner. I'll be on the trading view, it ended up being a winner. So this was another loss. Like, bro, losses were just raining down on me. Like, it was but losses are part of the game. You lose some, you win some, and bro, I didn't take this. Let me just look for. So I think those are the trades I took. Nothing on BTC. Yeah, those are the trades I took. Those are the trades I took. And I saw the icing on the cake was this US oil trade. If not for this US oil trade, my account would have been in the mud, like, bro. So this US oil trade, this was what saved my account this week. This is like a 7-hour trade, and this is a 4-hour trade. So I just saw this is a 4-hour, and it has tapped into this my original POI. Everything else is just refine. This is the original POI right here. It has tapped into it. I just took it back down. Okay, it has tapped into it. Let me just refine it. Then I refined it to this one. It tapped into it again. I didn't enter, so I knew it was going up. It tapped into it again and it went up. It broke structure right here. So this is a very good buy, another buy. So I drew this POI, right? I drew this POI out. So I'm going to be looking out on taking a buy next week. But I knew that there's going to be a retracement, because after a pull up and a break, we'll be expecting a retracement, like at least a retracement to a discount level. At least we'll be expecting a retracement like right back right here before another push up. And if you look at this chart, you'll be seeing something like this. That's pulled up, that's retraced, it's pulled up right again, broke this structure right here. And what do we expect again? It's going to push down back at least to like 50%, then push back up. That's simple basic market structure that everybody should know, and following that concept, you see, I caught this sell. This is a counter trade, as you can see, it's a counter trade. So I caught this sell right here, and I saw this sweep of liquidity, right? Swept this high, it broke this structure, and I just drew my POI, and I think I saw my POI in 30 minutes. I used this QMR candlestick. I drew it, price tapped into it right here, start pushing down. And I'm the type of trader that when I'm in a trade, I like to look at minor structures to know what the market is saying, what the price is saying, because the lower time frame prints can do more often than the high time frame. So if you go to the lower time frame, you tend to see what is happening fast. What is happening fast to enter the higher time frame. So what I just did is I just spot out zones that price can react from after entering the listing. So if price continue tapping these zones and continue pushing up like it's respecting these zones, it's not breaking them, I will know that this potential setup is going to fail. So it's either I just exit very fast, or cut my lose as short. So that's what I just do. I just marked out all these zones that can be like a potential reaction point. From, you can see market swept this. This is a sweep of liquidity. This is a break of structure right here. I drew out my POI. Market tapped into it. I drew out this potential reaction zone from what the market do. It tapped into it. After it tapped into the POI, it went and reacted. It gave this very beautiful bullish candle. But the analysis was correct, so it went back down. I drew this zone again. What did it do? It tapped into this zone again. It gave a reaction. I was expecting it to tap into this zone again. It will now be, if you know the concept of flip zone. I don't want to start going explaining that. If you know the concept of flip zone, I was expecting it to tap into this zone again. Then this zone should fail, but it started giving me bullish structure, signaling that it's solid. So it started going up and down. So when it went down, and I can see clearly that it is respecting bearish market structure, all these eyes is not feeling this high. So I knew that this trade was on my network. Okay, yeah. So I knew this trade was solid. So I was looking for re-entry again from this zone I've drawn out before. I just marked it. I just pulled it out. Put my sell order. I dragged my SL above this candlestick, and what the market will tap into it and went down. So this is the trade that saved my entire trading week. This is the trade that saved my entire trading week. And it's crazy how you can be on losing streaks, like let me say 4 losing streaks back to back, and just one trade will just take you out. One solid trade. And I think it's a skill set for a trader to be able to identify like valid trade and like double down on them. So to like, what's even English? To identify solid trades and like increase your risk so that you can make the most out of that trade. Yeah, people say that they'll always be set up, but it takes a very good or experienced trader to see a valid setup. And like I don't say you should like gamble and tap your accounts and continue tapping, but at least you should just like increase your risk. Like this trade now, when I saw that it was obeying structure, the zones were failing and some other confluence, I just took the re-entry. I reached 2% and my account was out of drawdown sharp. So this was the trade that saved my accounts this week. So these are the trades I took this week. So let me just go back to my account. So this is my account. On this is my 5k gold funded account. I am still in drawdown on this. As you can all see, $57 to blow this account because of the losing streak. Why I was not able to get out of this drawdown was because I noticed that the leverage gold funded as on US oil was very small. Like I literally risked 1.5 standard lot on the account, and the profit was giving me $57. So the leverage on this account, it is very, 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 very small. You can see I'm I'm on a losing streak, like back to back. So this has been, you can see all red, minus $140 plus 143 minus 99, minus 53 minus, like bro, on this account. On this account, you can see the win rate 12 point something percent. It is crazy. I've been on a losing streak back to back, but I'm still confident. I'm confident, like I'm going to come out of the losing streak. And on the QT account, I was down $500 on this account also. Like I was on a losing streak on this account also, like back to back. But I'm out of drawdown. I'm in profit already. I'm in profit. If you check closely, it was just this week. If you see, this is a US oil sell, US oil. It was this two trades that took me out of drawdown. Let me show you guys this thing. You see minus 17, minus 100, minus 95, minus 100, minus 60, minus. You see that has been losses back to back, heavy losses. But because of risk management, I'm still on these two accounts. And again, someone reached out to me during the week that can I, like that the person has a good funded account, that the person saw my video, my last video on, I was able to pass the 5K account and pass my QT account very fast. Like, can you just like my 5K account and see? So I said okay, and the person gave me the login of the $5,000 account, and I'm on the account presently. So let me just, this is the person's account. This is the person's account, and this is the account I'm trading. So I'm on, okay, I'm on the profit on this account. You can see $259. I had 6 trades, 3 was a loser, 3 was a winner. So I took 2 trades on Wednesday. It will end up being a loser. I took 4 trades on Friday, and as you can see, I'm up on this account. So I'm trading 3 accounts presently. Let's see how it goes. So this is just what I've been up to since. This is what I've been up to on this week, on this FOMC week. So let me just show my trades that I'll be looking out for this week. Let's go back to the charts. The trades I'll be looking out for this week. So first and foremost, this US oil trade is going to be a banger. Trust me when I say it's going to be a banger. So this is it. As price has tapped into this POI, and it has broken structure. I'm saying this is a super liquidity, break of structure, internal range liquidity. So this trade is not, I'm not supposed to take it, but I just saw it and I took it. So this is the normal valid trade. As I said before, this is like the move. This is like the move that I caught, this one. But the normal valid move is supposed to be this one. If you can just follow me. So now I'll be looking for buys. When the market opens on Monday, I will also observe to like 10 o'clock. Then, bro, I'll be looking for buys to fire down. This is 5.7 RR. But if I want to be on the safer side, I can just draw my SL back down here so that I'll know that I'm safe. So this first trade, US oil, bro, I'm doubling down on this trade. Like, I'm doubling down. So then the second one is gonna be this GBP CHF. I've been waiting for this trade for a very long time. So it's almost at POI. So I'll be looking to take a buy from this place back up. That's another E plus setup. I'll be looking at. It's another trade I'll be looking at. That's 2 trades already. Yes. USDCHF. I'll be looking to take this trade on USDCHF. I want it to come here and boom, go down. That's 3 trades, 3 plus setups. USDCHF, GBP, CHF, and US oil. Let me check. Let me see what else I got in my ass now. This is not really an A plus setup. It's just a zone setup. I classify this as like a B plus setup. I'll be looking to just take a sell from this POI back down. And here it goes. That's 4 trades. And this also. I was already on this trade already, but I had to close. I just closed it for the week. So next week I'll be looking to take. So what I just saw is that around like June, July, I took this trade. So I was waiting for re-entry to take this sell back down, but it broke it. So I'm just looking for buy continuation. So I just put my premium and discount level to check. So this period I fall on a discount zone, so I was just looking for buys, and mind you can see that when market retraced back here, it's pushed up. So I've been expecting it to come back and retrace here. I drove out my POI. When I drove out my POI, it tapped into it, but I didn't enter immediately. I waited for lower time frame confirmation. So when I drove out my POI, what did price do? As you can see, it tapped into the POI and it moved aggressively. When I go to the 15-minute time frame, I can see that the structure is broken with a body candle. This is not a wick, this is a body candle. So this is my confirmation that I am getting into it, that this is going to be a buy. This is a very bad confirmation because it tapped into this POI. This was the last eye. This is also an eye, but this was the last eye. I'm expecting the market to break it with a body. And it did that. And this is a 1 hour time frame, so it's a very valid trade. When it broke it with a body, I drew out my POI here. I'm using this candlestick as my re-entry. So I entered this. It tapped into my re-entry and it started going up. So I was on a little bit of profit. I had to just close everything because it was already Friday. So, but when it's Monday, I'll just observe. If you can just retrace back to the entry, I'll take the trade also. So this is another valid trade I'll be looking at. Yeah. So that's already 5. That's already 5. So let's see how it goes. They're trying to get $100,000 in prop payouts. So you can just follow the journey. So this is where I end the video. Like, subscribe, turn on the notification button, drop a comment. So if I drop a video like this, you'll be the first to be notified. Thank you guys for watching.